Hello and welcome. Thank you for joining us on Business Incorporated. I'm Chimeze Obi Iwago. On the show today, South Africa's gross domestic product down 2.5% in the first quarter. Deutsche Bank scales back in South Africa in a strategic shift. Plus, Kenya Airways seeks to run main Nairobi airport to boost earnings. Let's get the show started now. And here on the African continent, South Africa's JSE index was at intraday after the Statistics Office reported that the real gross domestic product fell by 2.5% in the first quarter after expanding by 3.1% in the third quarter. The index was down 0.45%. Meanwhile, the Standard Bank Purchasing Managers Index compiled by Market shows a slip to 50.0 in May from 50.4 in April. The reading was the lowest since January and right on the 50-point mark, separating expansion from contraction. And looking at other numbers there, the Nigerian market is still looking up, continuing Monday's gains. The index was up 0.74% at midday. Egypt led losses down 2.54%, and Kenya closed in the red on Monday. And in the Middle East, all the markets were in the green at intraday. The Qatari market was leading the gains, up 2.12%. Abu Dhabi was up 0.86%, Dubai up 0.33%, and Saudi Arabia up 0.40%. In the U.S., stock index futures saw minor gains ahead of the open as markets overseas showed a relatively mixed to positive picture. Around 5:20 a.m. Eastern Time, Dow futures rose 41 points, indicating a higher open of 23.31 points. The Nasdaq and the S&P 500 futures indicated a slightly positive start to the session for their respective markets. In data, the Services Purchasing Managers Index is due out at 9:45 a.m. Eastern Time, followed at 10 a.m. Eastern Time by data, including non-manufacturing ISM report on business, the job openings and labor turnover survey, and the quarterly financial report. And in Asia, stocks mostly recovered following some earlier losses on Tuesday, with major indices in the region higher at the close amid improved investor sentiment. Japan's Nikkei 225 closed higher by 0.28% as technology names and retailers edged up. Elsewhere, South Korea's benchmark Kospi erased earlier losses to go up 0.25% on the day, with gains seen in the tech and manufacturing sectors. The Australian S&P ASX 200 shared 0.51%. Major sectors were down, including financials, oil producers, and mining companies. The Greater China markets edged higher, with Hong Kong's Hang Seng Index up by 0.17% as developers and technology stocks moved higher on the whole. On the mainland, the Shanghai Composite rose 0.75%. And moving over now to Europe, the market there dropped in early trade as trade concerns continued to impact global markets. There's also a slew of corporate news. Let's get more from Ulrich Batz, my colleague there in Frankfurt. Hello, Ulrich. Good afternoon.
Hoppla. I'm sorry, I lost your...
Hello, Ulrich. Good afternoon. Oh, we seem to have lost Ulrich there, but I guess we'll get through to him as soon as possible. And let's move on now. Deutsche Bank will shut down its South African corporate broking advisory and sponsor services as part of its plan to return to profitability under new Chief Executive Christian Soin. Soin, who became CEO in an abrupt management reshuffle in April, is scaling back its global investment bank and refocusing on Europe and its home market after 3 straight years of losses. The bank, which works with other banks such as Citi, Bank of America, Merrill Lynch, and JP Morgan in South Africa, will retain its debt capital markets, fixed income and treasury services. The bank did not say how many jobs could be lost as a result of the shakeup, but a source at the bank said a small number of its 72 South African full-time staff will lose their job. And credit insurers have decided to withdraw insurance cover for South African retailer Steinhoff International's loans. Steinhoff, whose retail chains include Britain's Poundland, mattress firm in the US, and Conforama in France, has been fighting to recover from the fallout from accounting irregularities discovered in December. Steinhoff's Austrian furniture retailer Kika Lena had faced one of the biggest problems within the group, but said in January it secured enough cash to see it through this year. But international credit insurers have decided to withdraw insurance cover for Steinhoff's loans against the risk of default. Steinhoff said on May 10 it hoped to have a restructuring plan in place soon to put to creditors that would include measures such as fixing the maturity for all loans at 3 years from the restructuring date.